This is a podcast from the Business Times.
Good evening. It's Monday, August 17th, 2026. Here's your market-focused daily closing bell update by the Business Times. War, tariffs, and AI gyrations have done little to dent the flow of cash into emerging markets. As reforms, deeper local capital markets, and diversification away from U.S. assets reshape the asset class, global shocks that once triggered sharp sell-offs across developing economies have failed to derail investor demand this year. With emerging market debt inflows at a more than two-decade high and governments issuing record amounts of bonds, Asian shares edged higher today, led by Chinese stocks ahead of key economic data, while investors kept a wary eye on oil prices after sizable gains last week amid a stalemate in the Gulf conflict. The U.S. dollar slipped towards two-month lows after a soft run of data, including an unexpected drop in retail sales, had markets giving up bets for an imminent rate hike from the Federal Reserve. A rate hike next month is now priced at 30%, down sharply from about 50% a week earlier. MSCI's broadest index of Asia-Pacific shares outside Japan rose 0.5%, while Japan's Nikkei edged 0.3% higher. Chinese blue chips rose 0.8%, and the Hang Seng Index gained 1.6% ahead of China's activity data for July due later in the day. Forecasts are centered on a slowdown in industrial output growth to 4.8% from 5.3% previously. But investors could be bracing for an upside surprise given exports boomed on robust global AI demand last month. South Korea's stock markets were closed today for a public holiday. There was subdued reaction in the Korean won after U.S. President Donald Trump instructed the Pentagon to substantially reduce joint military exercises with the country. Japan's economy grew at a slower than expected pace in April to June due to lackluster household spending and business investment that analysts say mainly reflected one-off factors, although the Iran war continued to cloud confidence. Gross domestic product rose 1.1% in annualized terms. Government data showed on Monday, missing a median market estimate of 2.0% in a Reuters poll and below an upwardly revised 1.9% expansion in the previous quarter. Oil prices were mixed after last week's gains. Iran on Saturday called on the U.S. to accept defeat, while Mr. Trump urged Americans to accept higher gasoline prices while the conflict continues. Brent crude inched up 0.2% to just under $89 a barrel after rising 6% last week. In commodity markets, gold bounced 0.4% to just under $4,400 an ounce, having climbed 0.8% last week. That's it for today. For more business news and market updates, visit bt.sg. And Lens on Daily for the latest tomorrow at 10 a.m.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.